Hello and welcome back to the Crypto Club podcast. We are now on episode 14. I'm Gonz as always, and we have Mr. Hobo. Say hello, Hobo.
Hello, hello. Hope everyone is having a lovely Tuesday. I know Bitcoin's not having the loveliest of Tuesdays, but life goes on.
The highs come with the lows. You got to be prepared for both.
Indeed, indeed. Starting off this episode with a market overview. You can see here Bitcoin's sitting at just a hair below 19,000. Kind of just been chopping sideways for the last, about 2 months, which typically seems about the time frame of these ranges that we go through. So it's likely that we will see some volatility soon. Not to mention that the FOMC will be coming out tomorrow with a decision on a rate hike. I want to say there's a 70% chance of 75 basis points and 30% chance of 100. So we will see what
No
we
chance
get.
of 50.
Well, I mean, there's always the chance of anything, right? But that's not what people are pricing in.
Yeah, no, it's definitely not what's priced in.
Yeah, I mean, if that was to happen, that would be great short-term price action, I'm sure. Um,
Definitely.
I think that if we get 75, we'll naturally see some volatility, but I don't think it will have the greatest effect, as that's what the majority already believes is going to happen. So therefore, it's mostly priced in. Probably see a little bit more volatility with 100, but still, people are somewhat expecting that. So, even in the worst case scenario, we don't really have much more to lose, in my opinion. But of course, crypto is always volatile. It's 24/7, so you can go to sleep feeling good, wake up feeling not so good. It's just the nature of the game.
Just got to be prepared for everything.
It is true. So, if we take a look at Ethereum here. So Ethereum's holding up a little bit better than Bitcoin in comparison to the most recent lows of around 1,000 right here, sitting at 1,300. And this is about, maybe a week after the merge, something like that, 4 or 5 days. And that actually leads us into our first story. Ether drops 15% since major Ethereum network upgrade as traders take profits and fret over rate hikes. Ether has fallen more than Bitcoin since the cryptocurrency's underlying technology, the Ethereum network, underwent a huge upgrade called the merge. Ethereum is a blockchain technology that effectively allows developers to build apps on top of it. Ether is a native cryptocurrency that runs on Ethereum. The merge is an upgrade to Ethereum that changes the validation mechanism for transactions from a proof of work method to proof of stake. So proponents say that this will make validating transactions on Ethereum much more energy efficient. It has been eagerly anticipated by the crypto community. Despite the upgrade happening successfully, Ether has fallen more than Bitcoin as of recent. So since September 15th, the date the merge was completed, to Tuesday, Ether's down around 15%. Meanwhile, Bitcoin has dropped 5% in the same period. As I just noted several minutes prior, we still are higher up off of our local lows, though. So ahead of the network upgrade, the price of Ether roughly doubled from the lows of the year in June, far outpacing Bitcoin's gains. Vijay Iyer, Vice President of Corporate Development and International at crypto exchange Luno, said that the merge was already priced in for Ether and the actual event was a sell the news situation. There were quite a
I
few.
definitely agree.
Sorry?
I said I definitely agree with that.
Yeah, I also agree with that. There was a lot of people on both sides of it, whether it's sell the news or a fake out dump. It didn't seem to me like there were particularly any amount of people on one side. I saw a lot of people on both sides.
Hmm.
But unfortunately, here we are with Ethereum at 1,300. But traders are also shifting investments from Ether and other alternative digital coins back into Bitcoin, according to IR, since the expectation is that Bitcoin will outperform for a few months from here on. Investors are also wondering whether the regulatory standing of Ether may change after the merge. After U.S. Securities and Exchange Commission Chair Gary Gensler indicated last week that cryptocurrencies that work on the proof of stake model, which applies to Ethereum, could be classified as a security. That would bring it under the purview of the regulators. And this is largely due to the staking effect, giving stakers a return, which unfortunately, when applied to the classics or the classic rules of securities. Typically does signify a security, but really, you're just trying to fit a square peg in a round hole with crypto. Gensler, whose comments were reported by several news outlets, did not name Ether specifically. The proof-of-stake model involves investors staking or locking up their Ether and earning returns for doing so. For Ethereum, there's another concern. POS, also known as proof-of-stake crypto, may fall under SEC's scrutiny, said Yuya Hasegawa, crypto market analyst at Japanese crypto exchange BitBank. Crypto investors are also on edge ahead of an expected interest rate hike from the U.S. Federal Reserve this week. Central banks around the world have been raising interest rates to deal with rampant inflation, but that has hurt risk assets such as stocks. Cryptocurrencies have been closely correlated with U.S. stock markets, in particular the tech-heavy Nasdaq. With stocks remaining under pressure, crypto has also felt the heat. Inflation in the U.S. in August came in higher than expected, which hit stocks and crypto. From a macro perspective as well, inflation did come in higher and hence caused a sell-off across all markets, but Ethereum and altcoins did sell off harder, given they're along the more risky part of the crypto spectrum. IR said, Bitcoin has been trading in a range of about 18,000 to 25,000 since June, a level at which investors are buying in, according to IR. But any change in the macro environment in terms of inflation, of interest rate surprises, is definitely cause for concern, he said, adding that if Bitcoin falls below $18,000, the cryptocurrency could test levels as low as $14,000. Personally, I've heard quite a few people calling for $14,000, which makes me think that it's not going to happen. Of course, none of this is financial advice. Gons and I are just here to share our thoughts. Crypto is surely a risk-on asset right now, but we are seeing some huge signs of adoption rather rapidly, and hopefully eventually crypto will get to the point where it's very highly utilized and is seen more as a risk-off asset than a risk-on. Once we get into a just economic climate where crypto is highly accepted and the regulations are made clear, governments know how to work with it, things like that.
Yeah, it's an uphill battle. There's a lot of challenges and obstacles that crypto has to overcome. Ultimately, if it's gonna take its place as the next financial tool of the world,
Right.
which is the most logical step for us as we evolve with technology and as a race over time. We've gone from literal gold being the currency to so many different methods of payment, right? And so crypto is the next necessary step, right?
Yeah.
Everybody no longer carries cash for the most part, so the world has already expressed a desire to go digital.
Mm-hmm.
Crypto is the most accommodating version of that. That is also the most decentralized and the easiest to implement.
Right.
So it will happen. It's just a matter of how soon can countries and legislators sort out the intricacies, and also how soon can developers provide software that can help adoption, because that's ultimately the biggest hurdle. It's not even so much the fact that there's a lot of uncertainty and regulations and stuff. It's a matter of how can we get my 65-year-old grandmother to use crypto.
Right.
And until we have a solution to that is reliable, consistent, and easy to use, we probably will not go full scale with crypto anytime soon.
For sure.
But it is only a matter of time, because as I mentioned, it's inevitable, right? It's the next logical step. So
That it
just a
is.
matter of time.
And I think the coolest part about crypto with where it stands right now is how efficient it is for cross-border payments. Like legacy payment systems such as like Swift, while the funds may be available within a day or so, those funds aren't truly settled for, I want to say, up to like 10 or 15 days. It requires huge infrastructure within the banking industry, and it's just naturally inefficient.
Extremely.
And it also offers financial security to people that don't have access to banks. It gives them a safe, secure place to, put their savings, save money, also in countries where fiat is essentially worthless, right? Like, I want to say Turkey has seen like 50% inflation year over year this year, offers those citizens a way out.
Exactly. I mean, eventually, the goal of Bitcoin and or crypto in general is to be the money of the people, right? Because right now we just have money from different governments across the world.
Yeah.
So you are at the mercy of them, whereas, in an ideal decentralized currency, everybody is at the mercy of each other, which is much better.
Mm-hmm. Yeah, no, I would agree. Um, and it really can go to the extremes of both ways. It can either go extremely government regulated and controlled, with all of these CBDCs, things like that, or it could be extremely good and decentralized and truly the currency of the people. But, really, we just have to advocate and push on for, ethical adoption. But we'll get on to the next story here. So, crypto market bloodbath leads to 432 million in liquidations. The current market downturn is being attributed to a number of macroeconomic factors, such as higher than expected CPI data and a possible biggest Fed rate hike in 40 years. So the crypto market turmoil entered the third week of September as most of the cryptocurrencies started the week on a bearish note. The total crypto market cap dipped below $1 trillion again, with several cryptocurrencies recording a double-digit downfall over the past 24 hours. The ongoing bearish turmoil has led to nearly $500 million in liquidations for the leveraged crypto traders over the past 24 hours. Data from CoinGlass highlight that 130,087 traders were liquidated, with a total liquidations value of $431.51 million. Bitcoin leveraged traders lost $44.5 million, followed by ETH traders with a total liquidation of $8.39 million. Long traders made a significant chunk of losses on majority of the exchanges, with the average difference between the amount of long and short liquidations being 10 times. I think it's really interesting here. I'm taking note of 44.5 million being lost to Bitcoin leverage traders and 8.39 million being lost to ETH traders. Just a rough estimate, that's about 12% of that 431 million. So, that leaves, 88% to leverage traders on all sorts of different types of altcoins, which I think is very interesting to see. People really trading a variety of tokens here. The current market turmoil is being attributed to several macroeconomic factors, including the recently released Consumer Price Index data released on September 13th that showed inflation is yet to cool off. Bitcoin's price fell nearly $1,000 within minutes of the CPI data release. Since then, the market showed some will move up over the weekend, but saw another bloodbath earlier on Monday. The higher CPI data is expected to be followed by a Fed rate hike in the upcoming meeting scheduled for September 21st, also known as tomorrow, so we will see how that goes. Market pundits have predicted that the rate hike, a measure to control the soaring inflation, could be the biggest in 40 years. According to the CME FedWatch tool, the market has now fully priced in a minimum 75-point basis hike for the Fed funds rate and is not discounting the chances of 100 basis points. A 100-point increase would be the Fed's first such action since the early 1980s. The recently concluded Ethereum merge was also blamed by many as buy the rumors, sell the news event, where the price of Ether rose as high as $2,000 in the run-up to the merge, but has now declined to $1,300 post-merge. With the stock and crypto markets seeing a similar bearish trend, popular trader Clark was quick to point towards the similarities of the current market conditions to those of the 1970s. In his tweet, Clark noted that the market could turn bullish again towards the end of the year in the months of November and December. Thus, the crypto market could see another bullish rally in tandem with the stock market towards the end of 2022. We can only hope. I really don't think that we can go too much lower. We are down. Let's see, 69,000 to 19,000. Was that like 80%, 70%, something like that? We have fallen substantially already.
I think it's about 73%.
Yeah. Even if we go down to 10K, that's minus 50%. If we return to all-time highs, that's about a 3.5x. So the risk to return is definitely looking kind of delicious. I personally have been down cost averaging at these prices into long-term positions. I don't try to go all in on what I think is the bottom, because the next thing you know, there's a new bottom, and you wish you had some more dry powder aside for that. But we'll get on with the next story here. So, disgraced crypto founder says he's not on the run, but no one knows where he is. Interesting enough. Interpol could soon be looking for Kwon, the man behind recently cratered currencies Terra and Luna. The person most closely associated with last spring's crypto crash appears to be on the run after an arrest warrant was issued for him, and investigators have asked for Interpol's help to track him down. Kwon, the South Korean developer of the Terra USD and Luna cryptocurrencies, is believed to have been in Singapore since at least the spring, when these coins lost nearly all of their value. But Singapore authorities said this weekend he is no longer there, and South Korean investigators have reportedly asked Interpol to issue a red notice that would allow officers in member countries to provisionally arrest Kwon, pending extradition if they find him. Last Wednesday, the Seoul Southern District Prosecutor's Office issued an arrest warrant for Kwon and 5 other people who worked on both the currencies and Terraform Labs, the company that Kwon co-founded. Prosecutors did not list the charges, but investors have said he defrauded them in promoting the coins. Terra USD, which used a computer program that claimed to peg its value to the US dollar, and a related token known as Luna, both took off in the past year, with each multiplying in value dozens of times over before crashing in May. A Terra spokesman did not reply to a request for comment. Kwon also did not reply to a request for comment. He said on Twitter Sunday that we are in the process of defending ourselves in multiple jurisdictions. We have held ourselves to an extremely high bar of integrity and look forward to clarifying the truth over the next few months. The red notice request was originally reported by the Financial Times. The Kwon case is being watched closely as a sign of how aggressively law enforcement will pursue those engaged in allegedly illegal activities in the crypto space. Last month, the Treasury Department issued sanctions on Tornado Cash, which helps anonymize crypto transactions, in a strong example of a crackdown on tech-based financial tools. But the pursuit of individuals in crypto is much rarer, and Kwon's case could be a bellwether for how other projects that lost large sums of value could be targeted in the courts, and if eventually some investors might claw their money back. The 31-year-old Kwon graduated from Stanford University and briefly worked at Apple before returning to his home country several years ago to found a number of crypto projects, including Luna. Before the spring crash, Kwon was hailed as a visionary and even attracted a cult of everyday fans known as lunatics. I think it's funny or maybe funny is not the right term, but there is a video of Kwon talking about how Luna and UST are designed to go to zero. It's an old video, happened before this whole mess took place, but it was resurfacing around that time.
Lord, I'm just glad he's finally going to face justice.
Right.
It was so long overdue.
For sure. I think it'll set a good precedent. Hopefully, as we see more of these cases rise, we also see people just stop, scamming in crypto. Obviously, scams are rampant in crypto because of the lack of regulations. And while there have been a surge in charges brought against crypto scammers, it really seems like most of them go unnoticed where we stand currently. So I think that upping that ante will hopefully kind of ward off the scammers of thinking that crypto is an easy win for them. So nor was it just retail traders. Terraform also raised money from respective financiers, such as Silicon Valley VC firm Lightspeed Venture Partners. But in May, a quick sell-off began for still unclear reasons, prompting the loss of more than $40 billion in value, according to analysis firm Elliptic, as the price of Luna plunged to nearly zero and Terra USD went from $1 to 11 cents. The collapse helped trigger a broader crypto crash that affected dozens of other assets and companies. It was crazy seeing Luna go from over $100 to, it's like 1,000th of a cent now.
Yeah, it was insane.
Yeah.
And there are some people that made generational wealth shorting
Right.
Luna.
Yeah. Unfortunately, I had a short on Luna towards the top, and I closed it.
Yeah, I mean, I did too. Nobody really knew where it was going.
Right.
So, I mean, it was one of those things like you just had to set it and forget it and come back to it in like 5 days
Yep.
kind of deal.
See, so it looks like old Luna is sitting at $2.69. Yeah, it's crazy. You look at this chart, it looks like it crashed down to a penny and then
Yeah.
spiked way up to what is that, 20 something dollars. Been crashing ever since. Yeah, quite the saga Luna is. It seems like every cycle there is some major situation like this. In the previous cycle it was BitConnect.
Mount Gox. I mean, there's been tons of them. It
Right.
was Bit Grail very early on. Um, it's always irresponsibility and lack of accountability, which comes hand in hand with, we're that early into the space where people think they can, just create something and they're not accountable for it, but that's not the case. And history has shown that that's never been the case.
Right. It's crazy looking at this Luna chart. If you look at the volume spike when it started crashing is so big that you can't even see the rest of the volume. Yeah, quite the saga Luna is. I'm sure, it will go on to set a lot of precedents. It's good to see, South Korea taking legal action and issuing a warrant. I guess we'll see how the trials go if they can catch him. Hope he faces justice and set some new standards for crypto.
Definitely some much needed new standards.
Right.
Um, and it seems like every time there's this, fiasco
Mm-hmm.
that seems cyclical at this point, we always do see an improvement, right? Um, so it's just growing pains in the scheme of things, but ultimately these guys do have to be held accountable and face justice for what they've done.
For sure.
So this is no different.
100%. We'll go ahead and get on with the next article here. So, see, this was published September 20th at 1:15 a.m. So this happened extremely recently, either today or tomorrow, or sorry, today or yesterday. Yeah, this happened tomorrow. But a crypto market maker, Wintermute, hacked for $160 million. OTC services are unaffected. So Wintermute is a lending and OTC protocol, and it says their operations have not been affected despite the hack. Cryptocurrency market maker Wintermute has lost $160 million in a hack relating to its decentralized finance operation. According to a tweet from the company's founder and CEO, Evgeny Gavoy, something like that. You can see the name right here. The firm's lending and over-the-counter services have not been affected. Decentralized finance refers to financial activities carried out on the blockchain without the use of third parties, commonly referred to as DeFi. Gavoy said the company remains solvent with twice over $160 million remaining in equity. Wintermute is the latest in a long list of crypto companies to be stung by hacks over the past few months. CryptoBridge Nomad had nearly $200 million drained in August, shortly before DeFi protocol Curve Finance had $570,000 stolen. Blockchain security firm Certic estimated that more than $1.3 billion had been lost to DeFi hacks last year. Founded in 2017, Wintermute trades billions of dollars across crypto markets daily as it provides liquidity across multiple venues. Last week, it was named as the official DeFi market maker for the Tron network. Gavoy added that the company is still treating the hack as a white hat event and asked the hacker to get in touch. The hacker's wallet has been tracked down by on-chain sleuth Zach XBT. It currently holds around $9 million in Ether and $38 million in other ERC20 tokens. The firm suffered a mishap earlier this year when it sent $15 million of optimism to a wrong address. The tokens were eventually returned by the recipient. I think I remember us covering that story on the podcast a couple episodes ago. Quite the mishap, you would think they would do a test transaction first when they're sending $15 million of a token. But
That is so scary.
yeah, you live and you learn, I guess. But that's that's another crazy thing about crypto is just how much you can move so easily. If you had $1 billion in ETH, there'd be no paper signing, there'd be no anything. You would just input the wallet address and click send, and you would transfer $1 billion in under a minute.
I don't think a lot of people realize like when, and obviously so, right? Nobody's like extremely wealthy like this, but when you're trying to move millions of dollars at a time, it is not an easy process.
Right.
Like it is extremely inefficient and time consuming. It's insane. And so that's another like real world problem that crypto solves is I can move $1 billion in a second, no
Mm-hmm.
problem.
Yeah.
I hope one day that is a problem I get to solve, but
Right. Right. Yeah. Don't we all? But yeah, crypto is as risky as you make it. Unfortunately, some people blindly take on lots of risk, perhaps without realizing it or thinking that, they're too smart to fall victim to such things. But as we are shown over and over again, things do happen, things go wrong, and you just really got to be careful.
and do your due diligence, right?
Indeed. But we'll get on to our next story here, talking about Microstrategies' Michael Saylor. So Michael Saylor dropped CEO role to focus on Bitcoin strategy. The company may issue stock to raise cash for more Bitcoin buys. So MicroStrategy Incorporated, the largest corporate buyer of Bitcoin, made the smallest purchase of the cryptocurrency in more than 2 years after the company's co-founder dropped his CEO title last month to focus on the company's digital asset strategy. The enterprise software maker bought 301 Bitcoin for about $6 million at an average price of about $19,851. The company said in a U.S. Securities and Exchange Commission filing Tuesday. The purchases were made with excess cash. The aggregate purchase is already underwater, with Bitcoin trading at less than $19,000. As of September 19th, MicroStrategy and its subsidiaries held on about 130,000 Bitcoin, which were acquired at an aggregate purchase price of approximately $3.98 billion and an average purchase price of about $30,639 per token. MicroStrategy's aggregate holdings have dropped in value by about $1.5 billion, or around 38%, since it first started buying the virtual currency in 2020. An average price of $30,000 is not terrible. I'm sure MicroStrategy and Michael Saylor are using leverage, and they have a liquidation price somewhere. But considering a Bitcoin was at $69,000 within the last year, I don't think that $30,000 is the worst average, but if we're sitting at $19,000 and he's only buying $6 million, saying only buying $6 million sounds a little funny, but when you take into account that their portfolio is currently just about $4 billion, it's about 1.5% of their portfolio when the price is at a local all-time low.
Yeah, that's crazy.
Yeah, they're selling stock to buy Bitcoin, it looks like. So,
Well, I mean, let's also look at it from an analytical perspective. It makes sense, right? Because up until crypto came about, the best way to invest in technology and software for the most part was buying tech stocks, right?
right.
So, you know, moving forward, I think we're in a period of time in our history that we're gonna, transition over the next few years very rapidly to new software, new technology, obviously blockchain, and you're gonna see more of that money, especially traditional money, right? Venture capitalist firms and stuff like that, moving towards crypto and selling off, stocks from tech stocks specifically, because a lot of the, software is being built in crypto on chain,
Right.
and a lot of the talent in the real world is gravitating over towards crypto, right?
Yeah.
And so pretty soon, a lot of these companies, publicly traded companies, are going to start losing employees to start, that are being recruited by these crypto companies. And this isn't, going to happen tomorrow, right? Obviously, we're seeing the inverse of that right now. We're seeing a lot of crypto employees being laid off.
Right.
there's just not enough demand for them at the moment. But I I believe that we'll probably see the reverse of that happen once we start seeing, the adoption rate increase. We start seeing more serious players enter the space,
For sure.
and we'll see, what is happening right now as far as Michael Saylor is concerned. We'll see that on a larger scale.
Yeah, perhaps that will act as somewhat of an incentive for these, major companies to implement crypto as it, gains more steam. Naturally, these large companies are going to want a slice of the pie. So I think that will kind of even out that, flow of labor that you're talking about, as well as the flow of liquidity from the stock market into crypto. I think it'll be negligible at the point where these companies themselves are dealing with crypto
Hmm.
at a more common rate, at least, because of course you have companies like Microstrategies that are doing it at the moment, but they are the odd ones out for now.
Yeah, that's true.
Yeah, it'll be interesting to see if Michael Saylor makes any further big purchases. Perhaps him stepping down as the CEO is going to limit his buying power. Not really sure how that's going to pan out, but we will see. And we'll get on to the next story here. So FTX builds a $1 billion war chest to buy up distressed crypto and other assets. So CEO and co-founder of major cryptocurrency exchange FTX, Sam Bankman-Fried, has revealed that the company has built an estimated $1 billion war chest to continue deploying capital in order to bail out distressed crypto firms and buy their assets. Speaking in an interview with CNBC, he declined to state the specific amount in order not to sound too certain of the answer, but noted that FTX is still within its comfort zone in the amount of funds it is willing to deploy without emptying its coffers. So you have the issue of how much do we feel comfortable deploying, saying there's another part billion here that is completely unencumbered will get you within a factor of too certain of the right answer, SBF said when pressed on how much more FTX had to deploy. SBF further highlighted that going into the bear market, FTX had a couple of billions of its own funds, added to funds it raised from venture capital and profits it had made this year and from last year as well. Meanwhile, the 30-year-old billionaire continues to maintain that his company's philosophy is guided by the need to both protect consumers as well as stop contagion from spreading across the crypto ecosystem due to the failure of any asset or firm. He holds that this will in the long term be good for customers, regulations, and the ecosystem at large. FTX's bailout activities producing mixed results so far. The Bahamas headquartered exchange has engineered bailout deals with an estimated value of around $1 billion in the crypto industry this year. According to a Bloomberg report, some of these deals have already performed poorly, while the results of others are showing hopeful signs. In the report, SBF noted a $485 million loan made out to Voyager Digital Ltd. as one potentially sour deal, as the amount had not been enough to keep the company from filing for bankruptcy in July. In contrast, the $400 million revolving credit bailout given to BlockFi, another troubled crypto lender, was showing signs of being effective. SBF is not perturbed by the possible outcomes, as he says FTX is not extending the aid to only earn a profit from every deal, but to meet the need for capital in the market. FTX reached a market valuation of around $32 billion following a Series C funding round it conducted in January, as reported by CNBC. Regardless, the exchange has continued to explore ways to diversify its revenue stream away from just crypto fees amidst the market turmoil. I think that last sentence there is extremely important. Volume naturally slows down when you are in a bear market. A lot of these exchanges thrive on volume as their income, and they're also stuck in these positions with their crypto assets that are just going down. So you combine that with the decrease in volume and therefore the decrease in revenue, makes for quite the storm.
Very tough. I mean, they're backed into a corner, right?
Right.
And so again, it's how these companies handle the situations, right? Because there's different angles you can take. You can try to capture more market share because there is volume in crypto, right? It's just severely reduced.
Mm-hmm.
So you can try to capture more market share, which a good example is like what Binance did, right? They have zero fees on Bitcoin spot trading. Like we talked about that a few months ago, I think, when they first introduced it, and they've been running with that for a while now. Versus, do you just increase fees on your current users, and the ones you lose, it's okay because your loyal user base is still gonna, pay the fees anyways. It just depends on how they choose to tackle the problem, but they do have to get creative in order to survive.
Yeah. I also think FTX's bailout programs are, super good for the crypto market. Some people have certain feelings about it. As FTX is just throwing money around, but at the same time, you have situations like Luna, which we just talked about, which really impact the, crypto ecosystem as a whole, and
It's
have contagious symptoms. So FTX trying to mitigate that, I think, is great.
Yes, so it's double-edged sword, right? Because on one end of the spectrum, it's Sam Bankman-Fried going all in on crypto, and saying like, I will hold crypto up by myself if I need to, right? Which is great, right? And I can't think of somebody in the space more, at least up until this point, more responsible and more dedicated to the cause than him.
Right.
So in that aspect, like, gung ho.
For sure.
But on the flip side of that, it's the whole point of crypto is decentralization. This man is going to own an insane part of. I mean, he already does, but it's going to be even more,
Right.
right? How much power do we give one man? And again, if we're talking about a digital asset that, at least from the perspective of most people, is that they want it to be like worldwide,
Yeah.
right? Power to the people, not, power to each individual governments. Then essentially the one holding the biggest bag is the most powerful man in the world. So, Sam Bankman-Fried is, if that does play out to be that case, he is positioning himself to be in that role.
Right.
So it is kind of a double-edged sword in that regard. But, I definitely agree that it is good in the short term for sure, because it does kind of help mitigate that huge blow that all these irresponsible, companies nosediving and taking a large portion of the crypto market with them.
Totally.
It helps a lot.
100% agree with that. I think it's also important to remember that Sam Bankman-Fried is going all in on crypto, but crypto also made him all that he is today. I mean, I want to say he's one of the youngest billionaires ever. Sure, he's gotten older now, he's got more billions now, but when he first became a billionaire, I want to say he was early 20s, just arbitrage trading Bitcoin.
Yes. And again, it's because he loves the meaning behind crypto and the industry. He's very passionate about it because it is what made him who he is. So, you
Right,
know, I can't think of a better person to hold the industry up in tough times. But it is also a huge security, concern to have somebody be that powerful in the space if we're going in the direction that we're going.
for sure. Well, let's go into our next story here. So the Nasdaq starts a crypto custody service for institutional clients. The exchange said it is open to working with crypto native firms. So the Nasdaq, the second largest U.S. stock market operator, is starting a cryptocurrency custody service as it aims to cash in on the demand from institutional crypto investors, according to a press release on Tuesday. The company has hired Ira Auerbach, who previously ran prime brokerage services at Gemini, as the head of its digital assets unit, the release said. Nasdaq's move into crypto world follows a wider trend across Wall Street. Last month, BlackRock, the world's largest asset manager, said it will offer cryptocurrencies to its institutional clients. And Depository Trust and Clearing Corp, which processes almost all U.S. stock market trades, released its own blockchain as it looks to speed up the settlement of trades. I think that's super interesting. Also, both of these companies here, both Nasdaq and BlackRock, are, at least in this context, only talking about offering these to institutional clients. Hopefully, we see that become more publicly available to the masses. Demand across institutional investors for engaging in digital assets has increased in recent years, and Nasdaq is well positioned to accelerate broader adoption and drive sustainable growth. Tal Cohen, head of North American markets at Nasdaq, said in the release. Nasdaq will compete with crypto exchange Coinbase and crypto custodians Anchorage Digital and BitGo in holding Bitcoin and Ether for institutional clients in the U.S. Arbach said that the Nasdaq is open to working with crypto-native firms, although it doesn't have any plans for acquisitions in the short term, a Bloomberg report said. Everyone knows the Nasdaq. While BlackRock may be the world's largest asset manager, I think Nasdaq is a more recognizable brand and company in itself. I would say most Americans know what the Nasdaq is, if not most internationals.
Definitely.
So very cool to see. I don't know, with BlackRock and Nasdaq moving on to offer, crypto services for these institutional clients, really on the investment level, it's hard to see how much more adoption there could be aside from, enabling it to more of the general public rather than just institutional clients. So very cool to see.
Yeah, it's a one step forward.
Right. And also as these, large institutions adopt Bitcoin and Ethereum, I think it makes the chances less for regulators to really try to combat either of those cryptocurrencies. The greater infrastructure that gets built, the more people negative regulations would affect. So I think that is a very good thing to see. Yeah, so that wraps up our last story for Crypto Club episode 14. It's been lovely doing this week. We will be having another one coming out towards the end of the week, hopefully. As always, this is the CoinScan team. We have been rolling out some crazy updates with CoinScan, and we are going to have a massive one coming up very soon as well. You can see our site is simply the most technologically advanced charting site there is for ERC at the moment. We offer tools that are extremely important to checking token safety. So definitely check us out. If you're into DeFi, if you're into trading crypto, there are many reasons why the users on CoinScan love us so much. And we have a very loving community as well. If you fancy joining the Telegram, we would love to have you. We've also got a Reddit page, Twitter page, and Facebook page. Those will all be in the description. And yeah, we will see you later this week.